Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, retail sales for February fell 0.2% compared to the prior month's 0.7% gain. The PMI manufacturing index for March fell 0.6 points to 52.4, and the ISM manufacturing index for March rose 1.1 points to 55.3. Construction spending for February rose 1%. Markets rose sharply on the strong manufacturing data released both here and in China, with the Dow Industrials finishing 329 points higher. On Tuesday, durable goods orders for February declined 1.6% compared to the prior month's 0.1% gain. Markets lost ground after some disappointing earnings from Walgreens. On Wednesday, the ADP employment report for March saw gains of 129,000, while the ISM non-manufacturing index for March fell 3.6 points to 56.1. The EIA petroleum status report for the week ending March 29th saw crude oil inventory increase 7.2 million barrels. Markets rose slightly on reports that U.S.-China trade talks have made progress and most major conflicts have been resolved. On Thursday, jobless claims for the week ending March 30th fell 10,000 to 202,000, lower than expected. Stocks continued to rise and the dollar gained strength, and 10-year treasuries yielded 2.52%. On Friday, non-farm payrolls for March rebounded after a dismal February, coming in at 196,000, higher than expectations. Unemployment remained the same at 3.8%, and average hourly earnings rose a tame 0.1%. Markets opened higher on the news. Now let's take a look at some stocks. Walgreens Boots Alliance Inc. reported its second quarter financial results on Tuesday before market open. Walgreens missed analyst estimates, sending shares 10% lower. The company reported earnings of $1.64 per share on revenue of $34.5 billion, 8 cents per share lower than expectations. In addition, same-store sales dropped by 3.8% in the U.S. Walgreens now expects its 2019 earnings to be roughly flat compared to its previous growth of 7 to 12%. GameStop reported its fourth quarter financial results after the market closed on Tuesday, with shares plummeting over 12% after missing estimates. Additionally, GameStop said it would not provide any annual earnings guidance. The company earned $1.45 per share on revenue of $3.1 billion, with earnings falling short of expectations by 13 cents per share. GameStop saw its total global sales fall by 7.6% year over year. However, comparable store sales rose by 1.4%. For fiscal 2019, GameStop is expecting total sales to decline between 5 and 10%. Delta Airlines shares rose by 7% on Tuesday after the airline renewed its partnership with American Express for its Delta SkyMiles credit card. The partnership will continue until the end of 2029 and is expected to contribute an additional $7 billion worth of revenue to Delta by 2023. Delta reported that in 2018 it added 1 million new cardholders, while card spending increased by double digits. Tesla shares plunged by 10% on Wednesday after the electric vehicle manufacturer reported disappointing delivery numbers. Tesla announced that it delivered 63,000 vehicles in the quarter, which is a 110% increase year over year, but a 31% decline sequentially. Analysts had expected Tesla to deliver 76,000 vehicles in the quarter. Office Depot issued a warning for its preliminary financial results for its first quarter. The disappointing guidance sent shares tumbling over 23% on Thursday. The office and school supply retailer expects revenue of approximately $2.8 billion and adjusted operating income of $65 million. Office Depot said the lower than expected operating performance is due to its CompuCom division experiencing lower than expected revenue from its existing customers. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.